Hey, good evening. I'm Dan Fitzpatrick at stockmarketmentor.com, and it's Wednesday, September 16th, the night before the Fed makes its monumental decision about a quarter basis point rate hike. I can't wait. Okay, Paycom. Reason I'm mentioning this is because yesterday the stock broke out, but then after hours, the company reported that it's selling about, I think, close to like 500,000 shares, a secondary offering, but it's not really a secondary offering. The company doesn't get any money. It's just insiders that are selling, and they're selling to some private investors, but they have to report that kind of thing. So the stock's knocked down today. And my suggestion last night was, hey, I think it's giving you an entry because you see the kind of move that this had yesterday. That's a pretty big move. That's a pretty convincing breakout on volume. So I like that. And so then the stock moves down. Oh, secondary offering, got to sell. And then as it turns out, it's not the company diluting its shares, just a bunch of people selling. And I don't know if they were planned sales before or not. I don't know. I don't care. But I just saw the stock falling and resting like right around 38, 39, something like that. And my suggestion was that it was an opportunity to buy a breakout that probably otherwise wouldn't have pulled back. So you look at this kind of volume here. This was a big washout, and the stock is back in. It's back in the in the cluster here, like right in the middle. There's really not a whole lot of difference between this here and any of this stuff, except that this follows a breakout. We saw a similar thing back here, but this really wasn't a squeeze, was it? So my point is, if you're buying this stock, if you're owning this stock, be patient with it, but just know that this was a really bullish sign. And the fact that the stock reversed today isn't, to me, particularly a negative, because that's actually kind of what I expected it to do. It would be a negative if the stock kept falling, but we have to wait for future days for that. So my idea is on this one, if you're looking for, first of all, if you're looking for something to do, wait until after 2 o'clock tomorrow, because the market's just going to be super volatile. And if you're looking at any particular stocks that you want to get, know what prices you'd like to buy them at. For example, we're looking here. Let's say after the Fed reports earnings, stocks get really volatile. Well, maybe it would be nice if you could buy this thing right at the 50-day moving average. We can use any stock. Just pick a point where you'd say like, wow, if the stock ever got down to there, I definitely want to buy. Well, it could be gyrating enough tomorrow after the Fed announces what it's going to do. It could be gyrating enough to where you're going to get a great fill. So just keep that in mind. But anyway, back to here. So it's still in consolidation within a volatility squeeze, but I think this was meaningful, and I think you can hold this stock and wait for the squeeze to continue. One caveat though, if the stock starts trading below the 50-day moving average, then I think you definitely want to get out. So, okay, members, over to the strategy session. We're covering a couple things that I think will surprise you.